Breaking news for seniors across America. The IRS has just dropped a bombshell announcement that could put up to $3,500 in your pocket this month. Imagine walking to your mailbox and finding a check that could cover months of groceries, utility bills, or even that medical procedure you've been putting off. This isn't just another empty promise, it's a legitimate government stimulus program that's already helping thousands of seniors breathe easier financially. But here's the shocking truth. Nearly 40% of eligible seniors might miss out on this money simply because they don't know they qualify. Are you one of them? In the next few minutes, I'm going to break down exactly who's eligible, how much money you could receive, and the simple steps you need to take to claim your share. Plus, I'll reveal 3 little-known qualifications that most financial advisors aren't telling their clients about. What if I told you that your Social Security status, age, and even your state of residence could actually work in your favor this time? Stay tuned, because this information could be worth thousands of dollars to you or your loved ones. Before we dive deep into these life-changing details, make sure you hit that subscribe button and turn on notifications. Let's begin with the most pressing question on everyone's mind. What exactly is this new stimulus package? The IRS has recently unveiled a comprehensive relief calendar that combines multiple assistance programs specifically designed for seniors. This isn't a single payment, it's actually a strategic combination of 3 separate relief initiatives that, when maximized properly, could put up to $3,500 in your hands this month. The first component of this relief package targets seniors who experienced increased medical expenses during the past year. The IRS has recognized that healthcare costs have skyrocketed, and they've responded with a specialized medical expense relief payment. This portion alone could provide up to $1,400 for qualifying seniors who meet specific medical expense thresholds. But here's where it gets interesting, and where most people miss out. The second part of this stimulus package is actually an enhancement to existing benefits. The IRS has implemented what they're calling a Cost of Living Adjustment Supplement, or COLAs. This supplement is designed to bridge the gap between current inflation rates and previous benefit calculations. For eligible seniors, this could mean an additional $1,200 in relief funds. The third component, and perhaps the most overlooked, is the state-specific senior relief program. Depending on your state of residence, you could qualify for up to $900 in additional assistance. This is where your location actually becomes a valuable asset in maximizing your total stimulus amount. Now, let's address the eligibility requirements that have many seniors wondering if they qualify. The good news is that the IRS has actually simplified the qualification process compared to previous stimulus programs. The basic requirements include being age 65 or older, having a valid Social Security number, and meeting certain income thresholds. However, there's a crucial detail that many people overlook. You don't need to be currently receiving Social Security benefits to qualify for all parts of this stimulus package. In fact, some seniors who are still working part-time or have other sources of income might be eligible for even higher amounts due to the way the IRS calculates qualification tiers. Let's talk about income thresholds, because this is where many seniors mistakenly disqualify themselves. The IRS has established a surprisingly generous income ceiling for this combined stimulus package. Single seniors with an adjusted gross income of up to $75,000 may qualify for the full amount, while married couples filing jointly can earn up to $150,000 and still be eligible for maximum benefits. But here's a little-known fact that could be a game-changer for many of you. The IRS is not counting certain types of income toward these thresholds. Things like life insurance proceeds, some annuity payments, and certain types of pension distributions might not count against your eligibility. This means you could be eligible even if you initially thought your income was too high. Another critical aspect of this stimulus package is the timing. The IRS has published a detailed calendar showing when payments will be distributed based on the last 2 digits of recipients' Social Security numbers. This systematic approach helps prevent system overload and ensures smoother processing of payments. However, it also means that knowing when to expect your payment, and more importantly, when to take action if it doesn't arrive, is crucial. Let's break down the payment schedule. If your Social Security number ends in 00-20, you're in the first distribution group, with payments scheduled for the first week of the month. Numbers ending in 21-40 are in the second week, 41-60 in the third week, and 61-99 in the final week. But don't worry if you miss your initial window, the IRS has built-in grace periods for each group. Now, let's address something that's causing confusion for many seniors: the application process. Unlike previous stimulus programs that were automatically distributed, this combined relief package requires some action on your part. The good news is that the IRS has streamlined the process, making it accessible even for those who aren't tech-savvy. The first step is verifying your eligibility through the IRS portal. You'll need your Social Security number, last year's tax return, if you filed one, and documentation of any qualifying medical expenses. Don't worry if you haven't filed taxes recently, there's a separate verification process for non-filers that's actually quite straightforward. For the medical expense portion of the stimulus, you'll need to gather documentation of qualifying healthcare costs. This includes obvious expenses like doctor visits and prescription medications, but many seniors don't realize that things like medical transportation, home health care, and even certain medical home modifications might qualify. The COLA's portion of the stimulus package typically requires less documentation, as the IRS can verify most of this information through existing Social Security Administration records. However, if you've experienced significant changes in your cost of living expenses, having documentation ready could help maximize your benefit amount. For the state-specific portion, requirements vary by location. Some states have automatic enrollment for seniors who meet certain criteria, while others require a separate application. This is where many seniors leave money on the table. They don't realize they need to take additional steps to claim their state-specific benefits. Let's talk about something that's causing anxiety for many seniors. What happens if you make a mistake in the application process? The IRS has actually built in several safeguards to help prevent errors and provide opportunities for corrections. They've established a dedicated helpline specifically for this stimulus package, staffed by representatives trained to assist seniors through the process. One common concern is about receiving payments if you've moved recently. The IRS has implemented a new address verification system that cross-references multiple databases to ensure payments reach the correct recipients. However, if you've moved within the past year, it's crucial to update your address through both the IRS and Social Security Administration to avoid delays. Another frequently asked question concerns seniors who have someone else managing their finances, such as a power of attorney or adult child. The IRS has created specific provisions for these situations, allowing authorized representatives to assist with the application process and even receive payments on behalf of eligible seniors. Let's discuss something that many financial advisors aren't telling their clients: how this stimulus package could affect other benefits. The good news is that these payments are generally not counted as income for purposes of determining eligibility for other federal or state assistance programs. This means receiving this stimulus shouldn't affect your Social Security, Medicare, Medicaid, or other benefits. However, there are some strategic considerations regarding timing and how you receive the payments. For example, if you're currently receiving means-tested benefits, you might want to consider how you manage these stimulus funds to ensure they don't impact your other assistance programs. The IRS has provided specific guidelines about how long you have to spend these payments before they might be counted as assets for other programs. Now, let's address a crucial aspect that many seniors are wondering about. What can these stimulus funds be used for? The short answer is anything you need. Unlike some assistance programs that have strict spending requirements, these stimulus payments are yours to use as you see fit. Whether you need to catch up on bills, pay for medical care, make home repairs, or even create an emergency fund, the choice is yours. However, I'd be remiss if I didn't mention some smart strategies for maximizing these funds. For seniors who receive the full $3,500, this represents a significant opportunity to improve your financial situation. Consider creating a balanced plan that addresses immediate needs while also potentially setting aside some funds for future expenses. Let's talk about timing and preparation. Even if you qualify and submit everything correctly, it's important to understand that payments don't happen instantly. The IRS calendar shows distribution over a 4-week period, but various factors could affect individual payment timing. Having realistic expectations and a plan for managing expenses while waiting for your payment is important. For those who are helping senior family members with this process, there are special considerations to keep in mind. The IRS has created specific protocols for family members assisting with applications, including documentation requirements to prove authorization. Understanding these requirements ahead of time can help avoid delays in the process. One aspect that's particularly relevant for seniors who are still working is how this stimulus package interacts with employment income. The IRS has included special provisions for working seniors, recognizing that many continue part-time employment to supplement their retirement income. Understanding these provisions could be crucial for maximizing your benefit amount. Let's address some privacy and security concerns that many seniors have expressed. The IRS has implemented enhanced security measures specifically for this stimulus program, including multi-factor authentication for online applications and increased monitoring for fraud attempts. However, it's still important to remain vigilant and aware of potential scams. Speaking of scams, there's been an unfortunate increase in fraudulent activities targeting seniors regarding these stimulus payments. Remember, the IRS will never call, email, or text you asking for personal information or payment to receive your stimulus. All official communication will come through regular mail, and the application process is free. For seniors who don't have internet access or aren't comfortable with online applications, there are alternative methods available. The IRS has partnered with various community organizations and senior centers to provide assistance with paper applications. Additionally, their phone support system has been expanded to handle increased call volume related to this stimulus package. Let's discuss appeal options, because this is something many people don't realize exists. If your application is denied or you receive less than you believe you're entitled to, there is an appeals process. The IRS has streamlined this process for seniors, making it less intimidating than traditional tax appeals. One of the most positive aspects of this stimulus package is its potential ripple effect on local economies. When seniors receive these funds and spend them in their communities, it creates a multiplier effect that benefits local businesses and services. This was actually one of the key considerations in designing the program. For seniors who are currently paying off debt, this stimulus could provide an opportunity to improve their financial situation. While the funds can be used for any purpose, creating a strategy for debt reduction could help maximize the long-term benefit of these payments. Consider consulting with a financial advisor to create the most effective plan for your situation. Looking ahead, there are indicators that this might not be the last stimulus package targeted at seniors. The IRS and other government agencies are continuously monitoring economic conditions and their impact on older Americans. Staying informed about future developments could help you take advantage of additional assistance programs as they become available. If you found this information helpful, please give this video a thumbs up and share it with other seniors who might benefit from this stimulus package. Don't forget to subscribe to our channel and hit that notification bell to stay updated on future financial opportunities and assistance programs.